Would you go in business with Uncle Sam as your business partner? What if you had no idea what his share of the business would be? Whether you like it or not, you may already be in business with him if you have a 401k, IRA, or other tax-deferred account. At some point in the future, Uncle Sam's going to come calling and want his share of the pie. Unfortunately, we have no idea how big that slice will be. Hi, I'm Greg Kite. If you're a sports fan, you might know me better as a two-time NBA champion with the Boston Celtics during my 12-year NBA career.
Greg Kite was tagged.
Things worked out and got a little lax now.
Greg Kite. Here's Greg Kite working against Cartwright tonight.
I never retired from pro basketball. They just got tired of me. So as a second career, I've become a financial strategist and advisor. So for the last 18 years, I've been helping people optimize their assets, take the wobble out of their financial life so they can focus on family, faith, friends, other things that are truly important to them, and enjoy life while they have a more clear and secure financial future. In my college days, I met my wife, who was Jenny, who was also a college basketball player. In fact, that courtship resulted in me proposing to her on a basketball court. How romantic. However, I learned that Jenny wanted a big family, and I am thinking in terms of, basketball players, volleyball players, supermodels. We did build a team. We have quite a team, and now we've been blessed with a large family, raised our children, and now we're blessed with 21 grandchildren. And for us, that's what it's all about, being able to help our family, do things for others. And hopefully I can make your financial life a little less stressful, enabling you to sleep better at night and enjoy the things that are truly important to you. In my professional career, one of the first things when I was getting licensed, I heard about a guy named Doug Andrew. He's a best-selling author. I was told by the trainer when I was first starting in the industry to go read one of Doug's books, Misfortune. And then he came out with Misfortune 101. Doug's latest book is The Laser Fund. He's not only a best-selling author and financial strategist, but a mentor. Doug helped to form a group that I've become a part of called IUL Masters. We're one of the top 1% of IUL professionals in the country, and I am a certified IUL professional. I'd like to offer you a copy of Doug's book, The Laser Fund, for free. If you're interested in that, I'll have some info and a link here below the video where you can get one of those. All I ask is that you participate a little bit by paying the shipping and handling of that. So what is an IUL? An IUL is an indexed universal life policy that's been likened to a financial Swiss Army knife. It's a dream solution. It's a life insurance policy, so it does have a death benefit. It's going to blossom when you die, but the living benefits of this, things that you can do and use it for during your lifetime, are many, including retirement planning, college savings, working capital account for a business, real estate management, tax reduction, among others. It's been said that the three biggest dangers that we face to building our wealth are rising taxes, inflation, and third, market volatility. Let's talk about secret number one, eliminating taxes and losses. There's your business partner, Uncle Sam. And in another episode, as you tune into this channel, you can learn more about eliminating losses. One of the great things about an IUL is protected against market volatility because there are no market losses in the account. But let's focus on eliminating taxes and see what that looks like. So what do you think? Will tax rates in the future likely be lower, be the same, or see higher? Well, most people that I talk to believe that they will be higher. Another way to look at this, the bite that Uncle Sam can take out of that pie, is if you use the example of taking $1 and doubling it 20 times. The compounding effect is phenomenal. If you double it 20 times, it's worth over $1 million. However, if you take a 25% tax bite out of it, that $1 million is reduced to $72,000. And if tax rate were 33 1/3%, it's only $27,000. What a dramatic difference in your share of the pie. So think about this. If you were a farmer and you wanted to plant a crop, that's going to be a lot of work, right? Got to till the ground, cultivate it, water it, harvest it eventually. You got to buy some seed to start, right? Which is going to be worth more, the seed or the harvest? Of course, you wouldn't go to the trouble of planting the crop and doing all that work unless the harvest was going to be more. So which would you prefer to pay tax on, the seed or the harvest. Let's take a look at historical tax rates and how this plays into what it might look like in the future, and then get down to a couple of individual examples. Income taxes were started back in 1913. Back then it was a one-page document. If you were to take all the pages of the tax code now and stack them up, you could make many stacks as tall as I am. I'm almost 7 feet tall, 6'11". Anyway, the tax code has become very complicated. Also, tax rates, if you look at this chart, the highest marginal tax rate in our history has been as high as 94%. Fortunately, for the last 4 decades, going back into the 80s, we've been at some of the lowest marginal tax rates in history. It may not feel like it when it comes to tax time, but what happens in the future? There's a lot of unfunded liabilities out there, Medicare, Social Security. How do we do that? National debt. How do we take care of these things in the future? One of the most likely ways that this will happen is higher taxes. Well, fortunately, back in 2017, a piece of legislation passed called the Tax Cuts and Jobs Act. It lowered the tax rates anywhere from 1% to 4% in the given tax brackets, which you can see on the chart here on the left. For example, the 25% bracket dropped to 22%, 28% bracket dropped to 24%. And those two brackets, frankly, are where the majority of middle and upper middle income Americans reside. How long will that last? It wasn't permanent. It's due to expire at the end of this year. And the rates at the end of 2025 will go back up to those 2017 rates and above. So in essence, we've had a sale on taxes, and it ends at the end of this year. Now, I have a question mark at the end there because right now there's legislation pending that would extend these tax cuts. And if it does, it's still a terrific time to be able to do some significant tax planning that we'll talk about here in a minute, and get yourself in a position where you will have lower taxes during your lifetime. So how is the money that we save, how is it taxed? There's 3 categories, 3 funnels that you see here. The first one is some money is taxed later. That's money, like I spoke about earlier, that's in tax-deferred accounts, things like 401ks, IRAs, pensions. Money is put into those accounts. You get a tax deduction. Maybe an employer contributes as well. You don't pay any tax on that money now. You're not paying tax on the seed. While it's growing, you're not paying tax. But when you collect that harvest, when you take distribution on that, you will have to pay taxes in the future at some unknown rate. And those distributions will become mandatory when you're in your 70s if you don't have to take them out earlier. Secondly, there's post-tax. Post-tax are where we make contributions to accounts like bank accounts, brokerage accounts, and real estate, where it's made with after-tax dollars, and then the income off of those is taxed now, with the sale of some of those assets being taxed in the future. Then finally, there's tax-advantaged accounts. These are where contributions are made with pre- and post-tax dollars, and they can go to fund accounts like Roth plans, FSAs, HSAs, College 529 plans, and my favorite of it all, the laser fund, the cash value life insurance. Distributions from these accounts are tax-free. How can you have the right balance on this? I would recommend, just as a rule of thumb, that most people have at least 40% of their assets in this tax advantage bucket. And when they see what the power of what it can do for them, maybe even more. So how do we get there? One strategy is what I call a strategic rollout. We've heard the term rollover. This is a rollout. You want to roll money out of those tax-deferred accounts and move them into a tax-free situation. As you move money and move it in the right direction, you can't end up in a lower tax bracket for the rest of your life. Even perhaps in many cases, a 0 tax bracket. It is achievable. So the strategic rollout, how does it work? We'll move money from your tax-deferred account, such as your 401k, IRA, pay the taxes now, and then when working with a certified IUL professional like myself, put it into a properly structured, max-funded IUL. In that IUL, it will grow tax-free. You can access the funds tax-free. And then when you die, the amount of money in there will blossom and will be passed on to your beneficiaries tax-free. Here's a couple of quick examples with 2 couples. One couple, both about age 50, with $1.2 million in tax-deferred accounts, a $215,000 a year income, who plan to retire in about 10 years. Using a life expectancy of age 85, with a strategic rollout, they would save over $3 million just in federal taxes alone, let alone state taxes if they lived in a state where there was state income tax, over $3 million versus the current strategy of just leaving that money in those tax-deferred accounts. Second example is a couple in their early 60s with a $325,000 tax-deferred account and a $190,000 income. They plan to retire in about 9 years, and using a life expectancy of age 95, they would save almost $400,000 in taxes by performing a strategic rollout with a certified IUL professional. Now, and like I said, these are just accounting for federal taxes. If you live in a tax state, particularly a high income tax state, your tax savings could be much higher. Comment down below if you've experienced this tax tiger and were surprised. I'd like to hear how you got through it and what you did. If you want to learn more about this, tune in to other episodes on my channel. Subscribe, like, follow me. Follow the link in the description below if you'd like to get your free copy of the Laser Fund. All I ask is that you participate with a little skin in the game by paying the shipping and handling. I hope this book helps you as much as it's helped me. I look forward to hearing from you soon.